After hitting 45,800 with a pullback and a test of the 42K level, we actually ended up holding that level, and today we're finally seeing some movement back to the upside. In the last video on this channel, we were discussing this mid-range for Bitcoin. We were discussing how the price generally moves pretty quickly and swiftly through this range, and that it was very likely that Bitcoin was going to be looking to push up towards possibly as high as 52 to 53,000 on this run, which we are still, potentially in the process of doing. And today I want to observe a couple different indicators, a couple different metrics that could guide us through this next major move for Bitcoin and what we can expect over the next couple of weeks, potentially. All of this and more in today's video. What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be discussing Bitcoin and what to expect over the next couple of weeks. And before we get started, guys, definitely smash that like button and subscribe if you're new to the channel. Now let's get started. First of all, we have this post that I made here on Twitter discussing the point of control sitting around 47,000. And just to clarify for those of you that don't know, the point of control is based on the volume profile tool, showing the area with the most historic volume, the highest area of volume, which is sitting at about 47,000 right now for Bitcoin. And the 47,000 point of control is actually just a hair above this area, which is also another major point of control, which is at about 36,900. And you can see that generally the price does tend to gravitate back towards these zones where, when we're finding major bottoms or major tops. Sometimes we kind of just blast through the zone. Sometimes we do actually use it as support, or we use it as resistance in this range. So these are the areas with the highest area of interest. Now, I don't necessarily think that this is going to be a major point of resistance necessarily. If you look historically, what do we usually do? We usually move up above it or down below it. We did use it as support here. In this range here, in August, we actually moved above it, then back below it. And then in December, we kind of came just below it, then back above it, back below it. So this is the area of the most volume traded, 47,000. Though it's not necessarily going to be acting as a stop and reverse point. I think it's more of like a magnet, where if we do end up seeing Bitcoin break above the point of control 47,000, we may end up testing 52 to 53 as our actual resistance point, and then look to gravitate back down below it and sort of just look to use 47,000 as an area to settle down before potentially punching back up, or maybe dead cat bouncing back to the downside. Now, something else I wanted to discuss was what Eric Crown posted here on Twitter today, which is quite interesting. The net unrealized profit and loss divergence, where over here in June and July, we had the NUPL coming down to this low point. But what's interesting is that we're currently sitting in a lower low formation in the net unrealized profit loss metric. And the reason why that's interesting is because from that point you saw in the chart right there, we're actually sitting at in a higher low structure. So that's giving us divergence. It's showing that we probably had too much over exuberance on this move up. And now a lot of the people that entered the market in this range are sitting in, more losses. Looking at the NUPL metric on lookintobitcoin.com. So an example of this having played out in the past is actually over here in 2013, where we had lower lows on the NUPL right here, lower lows, right? And then we actually had higher lows on price from this low to this low. Just to let you guys see this a little bit closer, this is the 2013 chart. I'm talking about the April low up to the July low, right? So we had higher lows on price. If you go back to the metric here, the NUPL showed divergence, right? So lower lows, higher lows, just like over here, lower lows, higher lows. So we are sitting in a position that is kind of similar to 2013. And what resulted in 2013 was, of course, a major swing to the upside. Of course, past performance does not guarantee anything in the future, but it's just an example to show you where this has happened in the past. And another chart that I saw today that I want to bring up is from the account Ask Crypto Wealth on Twitter. And this is an interesting chart showing the monthly with the 20 monthly moving average. And if you're looking at this, every major bear market in the past has had a break below the 20 MA on the monthly, right? So back here in 2014, we fell below that when we had, a true longer term bear market. Up here in 2018, when we really broke that 6K support, well, we fell below the 20 monthly MA as well. That was a true bear market right there. We had a brief dip below it for the COVID panic. And if you're looking up here for Bitcoin now, we're actually still holding it. We've never fallen below it just yet. And of course, some people are calling this a bear market, but we haven't even seen a weekly downtrend. One thing you'll notice about all of these past bear markets is on the monthly and the weekly, you get, confirmed candle closes of lower lows, confirmed lower low closes on the weekly and monthly. Right here, over here in 2018. Currently, we don't have that. We actually have higher lows, right? We don't have a weekly downtrend, into lower lows. We don't have a monthly downtrend, confirmed closes, seeing lower lows. We're not falling below the 20 MA on the monthly. So in a sense, you could say that this is still technically, its own bull cycle, right? We're still holding higher lows. It's more of just a sideways market. It is a market environment we've never experienced for Bitcoin. I'll give you that. But until we get confirmed weekly candle closes with lower lows, or confirmed monthly candle closes in lower low territory and below this 20 MA on the monthly, it's technically not a bear market, right? Technically not. It's more of a sideways market if you're looking at this from a major macro perspective. So just wanted to mention that as well. So those are just a couple of the main points I wanted to make today in this video. Once again, the $47,000 point of control is just the area with the most volume traded historically in this range. It's not necessarily a technical resistance point. It's just an area that I think we're going to gravitate above and gravitate below. And then look to possibly reaccumulate lower, back below the point of control, right? And then look to just sort of expect the price to settle up, the market to settle up along this range. Possibly, right? Possibly. But of course, anything is subject to change depending on the performance. If Bitcoin does end up failing this range and seeing a lot of resistance here, and we end up breaking below our, near-term support levels, we could see the price gravitate back, a little bit closer to the second highest point of control at 36,900. Though right now, to me, it does seem like the bulls are maintaining the control of this trend reversal. Once again, as we discussed in the last video, the weekly Heikin-Ashi candles, very good at identifying trend reversals and, identifying continued trends. We are still holding green, right? We had the nice neutral reversal candle right there, and we're still holding this trend for the bulls. And I would still bet that it's very likely that we're going to be seeing more, multiple weeks to the upside at least, right? This is usually a very powerful trend identification tool, and we're still trending up until we get, an actual red reversal here. We're still looking to trend up, in my opinion, over the next few weeks, possibly landing us somewhere above that 50 level, maybe looking to consolidate at the point of control before another major move. But that's it for me today, guys. Hope you enjoyed, and I'll see you all in the next one.